Hello class, welcome back. In this video, we're going to talk about how to calculate percentage of completion method. Now, I'm going to first use a mini example where all the numbers, the dollars, are simplified. And then we're going to continue to the textbook example, which they use more complicated millions of dollars, the mix, the subtraction, and plus kind of more complicated. But the logic is still the same. So we're going to do a mini example first. Here is the information. There is this estimated total cost of the project being $6. Total revenue is $15. We're going to collect money, cash, in period 1 for $4, period 2 or year 2, $5, and period 3, $6. So 6 plus 5 plus 4 equals 15 total revenue. How about the cost? In these 3 periods, cost for period 1, we call it C1, is $3. For period 2 is $2. For period 3 is $1. Okay, this is the information. Now we are asked to compute revenue, expenses, and net income for year 1 and year 2. Remember, we are using the percentage of completion method. First, we need to find out percentage. Now, for year 1, how do I calculate the percentage of completion? First, of course, I'm going to use the cost, right? Year 1 actual cost is $3. And then I'm going to divide it by the total estimated cost, which is $6. 3 divided by 6, that is the total completion in percentage in year 1. All right, so let's do revenue first. I know that the total revenue is $15 given right here. And I know I have completed the project by 3/6. So I'm gonna use the total $15 times the percentage. Here is 3/6. I get my revenue for period 1 being $7.5. That is the revenue that we are going to recognize. How about the expense? Expense is the cost. Cost is actual, right? Cost incurred in year 1 is $3. So we simply copy paste $3 in the expense. So I have 7.5 as revenue, 3 as expense. Net income is the difference, which is $4.5. Got it? Right? Easy peasy. Now let's do year 2 or period 2 in the same logic. In year 2, our cost is $2, and I still divide it by the total estimated cost, which is $6. Here, then I get 2/6, which is the percentage of completion in year 2. Well, I use the same logic. First, for revenue, I use the total 15. $15 times 2/6, I get $5. This $5 is gonna be the revenue we are going to recognize in year 2. How about expense? Expense is the actual $2 cost occurred in period 2. So I have $5 as revenue, $2 as expense. The difference, $3, is my net income. I use the same to do year 3, no problem. It's basically 2.5, which is $1 divided by 6 times 15. Expense is $1, and then net income is 1.5. So this is the percentage of completion. Got it? Notice that we have never used the piece of information here, which is this one, right? I really don't care about what, I do not really care about the cash that we collect in each period. Well, this will be used when we do the journal entry, right? We need to debit cash, something, but it's not used in the calculation. Percentage calculation, we need to use the actual cost because that is our cost. We have an estimation of the total cost, and I'm gonna base my calculation on the cost, not on the cash we receive. Why? Because we do not really control how much cash we received. Although we have it in the contract, but who knows what happened to our clients, right? We don't want to endure that, uncertainty. but cost is incurred to our construction companies, so we have a better understanding of the cost. We're going to use the cost to calculate the percentage, and then use the total estimated revenue times the percentage to get revenue. Pretty easy, isn't it? Now, let's have a little bit complication, and this is actually really common. So we estimated a total cost of $6 in year one, and then everything is unchanged, except after year one, we enter year two. And in year two, the cost is still $2. But what if at the end of year two, our estimated total cost changed from $6 to $8? Let me use a highlighter, right? Before, in year one, we estimated the cost is $6. But at the end of year two, oops, we actually cannot finish the project using $6. It gotta be more. Our estimation was wrong last year. Wow, is it a big problem? Should I do a restatement to revise my last year's income statement? Because the calculation is wrong, the percentage is wrong. Don't worry, we don't have to do this. It's just a change of estimation. Thank God we haven't really recorded anything in year two. So we're gonna change and update to reflect this new cost in year two. How am I gonna do it? We still use the percentage of completion method, but now we're gonna first calculate the total completion, which is year one plus year two. Now we have the total percentage of completion. So we will have the total revenue to be recorded in year one plus year two. And whatever is recorded in year one cannot be changed. So we have the total, new total, minus the year one recorded revenue. The difference is what we should record in year two. Now, first step. So we need to calculate the total for 2 years. So we're gonna use $3 in year one, which is the cost C1, plus C2, which is $2. And then we're gonna divide it by the new estimated total cost, which is now $8. So I use 3 plus 2, which is 5, divided by 8. So the total percentage of completion for 2 years is 62.5%. Now, what is next? Next, we're gonna still use the formula, right? We have the percentage, and then I'm gonna time the revenue, $15. So I got 9.375. This is the dollar amount to be recognized for 2 years. So Y1 plus Y2 revenue should be 9.375. And I know for the expense, it's for 2 years is 3 plus 2 equals 5. So the net income for 2 years is 9.375 minus 5 equals 4.375, right? And then look at the information we have right now. We have the year one, and we know we need to record something for year two. And then we will get to 9.375. That is the 2-year sum. So simply enough, we can just use the 9.375 minus 7.5. We get the difference. That is what we're gonna record for year two, and that is 1.875. Same for the net income, right? You can use 7.375 minus 4.375 minus 4.5, which is a negative number, or you can simply use 1.875 minus 2. Either way, this is gonna be a loss. It's okay to have a loss. It's just, our estimation changes that leads to a loss for year two. Now, later, we're gonna learn how to do this loss journal entry. But we first need to understand in the computation per se, there's nothing different. We still use the formula. It's just that we're gonna use a total minus whatever have been recorded year one, we get the year two. Now, let's switch a little bit. We've been talking about the percentage of completion. What if there is no reliable measure of progress? that is the one, right? The situation where we have to put 0 all the way until the final. And we call it revenue recognition upon contract completion. Another way to call it is a cost recovery method. In that sense, we do not record anything until the project is fully completed. Now, that doesn't mean we haven't received cash from our clients at all. We do. We still bill them and they still pay us cash, even if the billing and the cash payment may not be the same. But it really doesn't matter. In terms of revenue recognition, we do not record any profit, no revenue, no cost in the income statement. So let's do the mini example for this. At the end of the year 3, no more estimated cost. Total revenue is still $15. We're gonna collect money in period 1 for $4, period 2 $5, and period 3 $6. We still have the same information for the cost incurred in the 3 periods, but this is what we are going to do. We need to make the net income to be 0 and 0 in year 1 and year 2. And year 3 is the year that we finish the whole project. So we're gonna totally allocate the 15 minus 6 equals 9 to year 3. And how are we gonna do it? In order to make the net income as 0, we know that we actually incur some cost, which is $3. So we back our revenue up. You know, something minus 3 equals 0. What is the thing? Which is 3. 3 minus 3 equals 0. Same for year 2. We gotta let the net income to be 0, and we have a 2 now. So we need another 2. 2 minus 2 equals 0. Lastly, we have a 1 for year 3. And we know that we're gonna have the revenue, gonna have the net income to be 9. How do we get the 9? I need to change the color. Pen, and then red. This 9 equals total revenue, 15, minus total cost, 6, equals 9. So we get the 9, right? And then we know in year 3, our cost is $1. So what is the revenue? And that's why we need the 10, which is 1 plus 9 equals 10. Now, this is the way we're gonna do for cost recovery method, or we use the cost to recover revenue. And that's how the name comes from. And you know, we do it when we have the situation that we have to recognize revenue upon completion. Well, there is one exception. Other than that exception, our previous net income before completion should be 0, or in other way, gross profit to be 0. Now, the exception is when we anticipate a loss. What does it mean? That means, you know, maybe in the middle of the project, we estimate that, you know, in this project, we're not gonna make any money. You know, we agree to have this revenue, right? We set the price, but the actual cost is gonna be exceeding the price. You know, something may have changed, there may have been a shock, who knows? But we do anticipate that we have an estimated loss. Remember the conservative, you know, feature of financial accounting, right? Whenever we anticipate a loss, we should recognize it immediately. So in that case, we will not gonna have a 0 here anymore, right? We're gonna have the loss at the negative number. We will talk about it later in the actual journal entry, but it will be quite simple. Now, we are going to switch to a more complicated in terms of the numbers. This is the example used in the textbook. Here are a table of the information. Now, don't be overwhelmed by the table. It's actually very simple and step by step. Let me walk through this table with you together. So in 2021, this construction company called Harding, they received a contract to build an office building for $5 million. So this $5 million is the total revenue. Harding will construct the building according to the specifications provided by the buyer, and the project is estimated to take 3 years to complete. According to the project, according to the contract, Harding will bill the buyer in installments over the construction period according to a pre-arranged schedule. Information related to the contract is as follows. Let me switch to a highlighter. Now, how to read the table? We know this is the yearly information, and the first line is the actual cost incurred during the year. In 2021, that's gonna be $1.5 million. Now, the second line says construction costs incurred in the prior years, sort of like what happened in the past. Since 2021 is the first year, we don't have any costs incurred. But you see in 2022, right, the 2021 number carried forward to the next year. And in 2023, there are 2 years. And how do I get the 2 years? I have 1 million plus 1.5 million equals 2.5 million. So let's go to line 3, cumulative actual construction costs. Well, you see a line here, which means this, the third line, is the total of the two. So for year 1, 2021 is 1.5. For 2022 is 1 million plus 1.5 equals 2.5. Now let's go to the line 4, estimated costs to complete at end of the year. Well, that means, you know, how many, you know, how much cost will be incurred in the future. In year 1, we estimated that we still need to put in $2.25 million in the future. And line 5 is the total. So 1.5 plus 2.25 equals 3.75. The last 2 lines is about billing and cash collection. We bill the customer in year 1, 1.2, and the customer pay us $1 million. See, day 2 doesn't need to be necessarily the same. Now, in terms of calculating the completion, percentage of completion method, do we need to use the bottom 2 lines? No, we don't. We will never use these 2 in the calculation. These 2 lines are just for journal entries. So you can ignore these 2. Now I'm ignoring the last 2 lines. I will focus on the construction costs. Right? Basically, I'm simply copy and paste what we have in the previous slide to this one. Okay, so again, we're gonna use what we've learned before, using the cost to calculate the percentage of completion. The actual cost for 2021 is 1.5. The total cost is 3.75. So I get the percentage, which is 1.5. This is how we're gonna do it. 1.5 divided by 3.75, we get the 40%. And I know the contract price is 5 million. So I will use 5 million times the 40% to get year 1 revenue to be recorded. Now see here, we're gonna do percentage of completion using the actual cost to date times the total cost. To date means in 2022, we're gonna use 2.5, right? 2.5 is the actual cost today, and the total cost changes. See, it changes from 3.75 to 4. We've also covered this change in the previous slides, right? In the previous mini example. So no worries, we just simply apply the formula. We do not need to be panicked. So here is it. We get 2.5 and we divide it by 4 million. We got the total cumulative revenue to be recognized today is 62.5%. Every times the 5 million, we get 3.125. We're going to do the same for 2023. And again, in 2023, the estimated total cost changed again from 4 million to 4.1 million. Don't think that this construction company is really, bad at estimating. Things keep changing. It's very normal. But it really doesn't affect our percentage of completion calculation. We just use actual cost to date, right? 4.1 because it's completed. Divided by 4.1 is 100%. So by now we should recognize revenue by 5 million. So we have this total. Now for 2021, since there is no accumulation, this is the first year. So the 2 million we calculated should be recorded, right, as it is. For 2022, the cumulative 3.125. That is not the amount we're going to record in year 2. That is the total amount of 2021 plus 2022. So you get 2022, we're going to do 3.125, subtract the difference, which is 2 millions, right? The difference will be recorded in 2022. Same logic for 2023. So this is what we're going to do. 2021, we're going to recognize 2 million, no problem. 2022, we use the 3.125 we calculated, subtract the revenue recorded in prior period, which is 2 million. And then we get 1.125. That is the net income. Sorry, that is the revenue. Sorry, that is just the revenue we recognize. And in 2023, we're going to do the same, 5 million minus 3.125. Then we get 1.875. Now, this example, we just calculate the revenue. It's okay about the cost, right? We are not asked to get the net income. I'm just asking you to calculate the revenue. But again, all the complication, in addition to what we've learned, it's just that the number is a little bit large. And, you are given a table instead of just lines of information. But really, it's no complication. You'll find the actual cost incurred, right? And you divided it by total cost. You get the percentage. You use the percentage times the contract price or total revenue. Then you get the cumulative. Do the difference, you will get 2022 and 2023's revenue. Now, I'm going to see you in the next video where we will have some multiple choice questions to reinforce the formula calculation. I'll see you then.